What's going on, y'all? It's your boy CEO Sean. I just wanted to make a quick video answering one of my students' questions inside of the community that I have. She said, hey, I just watched the latest video that you had. It was an awesome trade by my guy, Josh. It was well explained, but she had a question basically about when do I take a specific actionable signal versus like if I take one and it doesn't work, right? Which one should I take? Because there's so many actionable signals that I see in the market. Which one should I take? And I gave a 3-step breakdown of that entire thing, which I'm going to go over inside of this video. And I might actually have to break this up into individual videos so I can go as deep as possible in each of these. But I made this video specifically for y'all just to cover and answer this specific question. So my girl Nakia in the chat, shout out to you. Let's get into it. So so the question is, what can help to see a particular actionable signal is the one to take versus the other actionable signals that could have came before it, right? So we're gonna go into that right now. Let's get it. So I'm gonna pull up NQ real quick. So here's what we're gonna do. Picking a specific actionable signal comes down to 3 things. What else occurs? When does it occur? And where does it occur, right? So what other actionable signals are taking place with the actionable signal that you're trying to take? So let's just use, as for this example, let's say we're trying to enter using the 5-minute time frame, right? And the supporting time frames we're going to use is the 15-minute time frame, the 30-minute time frame, and then the 60-minute time frame, right? These are the supporting time frames that we're going to use coupled with our 5-minute time frame. So let's use an example real quick. Let's say I wanted to take this 2-1-2 reversal right here at the bottom, right? This 2-1-2 reversal right here, I wanted to get the entry right here on this 5-minute 2-1-2 reversal. And I want to ask the question, okay, bet. Well, what other actionable signals are happening either with or near this 5-minute time frame? So let's see this. If this 2-1-2 reversal works and it hits that target, right? Will this trigger another actionable signal on another time frame? So let's do this real quick. I'm going to sync globally. So this is what it looks like on the 15-minute time frame, and this is what it looks like on the 30-minute. So it doesn't necessarily create an actionable signal right here, because down here at that point, the 30-minute is still bearish and it's a 2 down, right? Still a bearish 2 down, but it's starting to fail and come back up, right? But when it hits the target, it'll be green. So if that works, it's going to set up to become an outside bar because it's 2 down. If it comes back through that, it's going to be a 3, which it does become, right? And right here on the 15-minute time frame, as you can see, we did not trigger a 2-2 reversal on that, but we set up for one. So I brought this up specifically just to show that. There's triggering signals and then there's setting up signals. So right here, this is a 2-1-2 continuation to the upside. Let's say this on the daily time frame. That 2-1-2 continuation triggers the 1-2-2 rev strat on the weekly time frame, right? Why does it trigger that? Because if it goes and it keeps working and it keeps pushing, it's gonna then trigger that on the same exact candle in one go, right? That's how it basically works with triggering candles. Setting up candles means this actionable signal is gonna work, right, and hit its magnitude and work. And then if it works, that's gonna set up the weekly time frame or a higher time frame to set up for an actionable signal. So right here, this 2-1-2 reversal on the daily time frame sets up this hammer candlestick on the weekly time frame, right? It sets up this hammer candlestick. So when the new candle opens up right here on the daily and the weekly time frame, when that breaks to the upside, reconfirming this bullish actionable signal, that then triggers the 1-2 reversal on the weekly time frame. So there's a difference between a setting up signal and a triggering signal. A triggering signal acts as like a domino, just boom, we're gonna knock it out. Once I push this one down, it's gonna knock down the rest of the actionable signals. A setup one is basically, hey, I'm throwing up the alley-oop. I want to see once the ball gets into your hand, I want to see if you can actually put it in the room. That's what a setup is, right? It's treat setting up signals like a layup, treat triggering signals like a domino effect, where it just keeps knocking them down all at once. So right here, this 2-1-2 reversal is setting up the 2-2 reversal on the 15-minute time frame. Because right here, when does the 15-minute open up? At 8:45 in the morning, right? So what happens? It's 8:30. Then we have at 8:35, 8:40, the new 15-minute candle opens up right here. What does it do? It reconfirms this bullish 2-1-2 reversal on the 5-minute, taking this to the upside, hitting the magnitude, which is the target on the 5-minute time frame for this 2-1-2 reversal actionable signal, triggering the 2-2 reversal back to the upside, And if that works, guess what that also does? That also triggers the outside bar on the 30-minute time frame. So you see how all of this stuff is kind of going hand in hand. Multiple actionable signals. So this 2 into reversal set up for the 2 to reversal to set up for the outside bar, which that's set up for a 3-2 expansion to the upside, which also coincided also to the 60-minute time frame, also setting up for a outside expansion to the upside, a 3-2 expansion to the upside, right? So this 2 into reversal coupled with these other actionable signals took it to the upside. Right, so that's an example of a setting up signal. Now I'm going to show you an example of a triggering signal. Let me see if I can find one. I believe it did it right here. I believe. Did it do it right here? It didn't. Perfect. Okay, so right here on the 5-minute time frame, I'm going to narrow this down to 2 time frames just to make it simple. Right. So right here, narrows down to 15-minute. Boom. So right here, this 3-1-2 continuation on the 5-minute time frame triggered the 2 to reversal on the 15-minute time frame. So right here, if I sync everything global so you can see it, you notice how price did not come down to trigger this just yet. It just, I think it just barely missed it pretty much. But right there, this inside candle, as you can see, this flips at 9:45. So at 9:45, look at this. This candle, this is 9:40. This is the 15-minute candle. Notice when my crosshair, look at my crosshair on this screen and see when it goes over to 9:45. We have 9:30, 9:35, 9:40. Then the 15-minute candle flips at 9:45. So we go inside candle right here. Then once we go 3-1-2 continuation to the downside, that then takes out, what does that do? That triggers the 15-minute, which then triggers the 15-minute. So that's a domino trade where it triggers the 5 to trigger the 15. So it triggers the 5 down to trigger the 15-minute down, right? So that's a domino effect. So that answers the first question, right? So what else occurs? What other actionable signals can you use to either set up and the move to the upside or downside, or to trigger that move, right? The next thing is going to be, when does it occur? Time frame continuity, right? So this is going to be very important. So remember I mentioned here, I was talking about 9:35, 9:40, 9:35. So the reason that this is important is because at 9:45, the 5-minute and the 15-minute flip at the same time. When I say flip, think of flip as a new candle is created, right? This candle right here was created at 9:45. The 5-minute candle was also created at 9:45. So notice how, watch this. A new candle was created at 9:30 on the 5-minute and the 15-minute candle. But only a new candle was created at 9:35 on the 5-minute because this is still the 15-minute candle. 3 5-minute candles make up a 15-minute candle. So if I draw it from the, like literally, if I draw it from here to here, and I sync it globally, you'll see the low to this high on this 15-minute candle is literally the start of 9:30 all the way up into this 9:40 candle. So 5 minutes, 10 minutes, 15 minutes, all of this combined creates this 15-minute candle. So when it flips on the 5-minute, that means that, all right, bet, new participants can now get in on the 15-minute time frame. So previously, participants at 8:45 were bullish. At 9 o'clock, they were bullish. At 9:15, they were bullish. At 9:30, they were bullish. At 9:45, they started to be bearish now. So guess what? Sellers, so at the flip with time frame continuity, right, that gives a chance for a new group to either, watch this, reconfirm or negate what was previously happening. So what was previously happening was price was moving to the upside. Then at 9, watch this, at that 9:45 candle, the 5-minute and the 15-minute flipped at the exact same time. So now sellers started stepping in on the 15-minute time, on the 5-minute time frame, right? Which started bringing the 15-minute candle down. But then it was only the actionable signal, the bearish actionable signal, which triggered the bearish actionable signal on the 15-minute time frame, and then obviously the follow through, right? Which started causing price to start going to the downside, right? So that is focusing on time frame continuity, right? So does it occur with time frame continuity or in full time frame continuity? When I say full time frame continuity, There's two types of full time frame continuity. The main one we're talking about is the 60-minute daily, weekly, and monthly, right? But if you're a day trader, then the intraday full time frame continuity is the 5-minute, the 15-minute, the 30-minute, and the 60-minute. So those 4 time frames. That's why I have those 4 time frames up usually, because that represents intraday full time frame continuity. If for example, if the 5, 15, 30-minute and the 60-minute time frame are all going up at the same time, you have full intraday time frame continuity to the upside. So for example, if I'm in this trade on a 2-on-2 reversal, right, and I keep holding this thing, right, the 5-minute, if I go on this candle right here, let's use this candle right here, right? This is the 60-minute time frame. This is the open of the hourly time frame. So that means that anytime it's above this light blue line, everything is green. So right here, watch this. Everything above this on the 60-minute is green. Everything above this on the 30-minute is also green. Everything above this on the 15-minute is also green. Everything above this on the 5-minute is also green. So guess what? If it's green, we're still going 2 up, 2 up, 2 up, 2 up, 2 up, 2 up, and all these are green. This is green, this is green, this is green. That means that you have full time frame intraday time frame continuity to the upside. So if I take this, watch this. If I wanted to take, for example, this actionable signal right here, right? I'm still looking for, remember I told you, the actionable signal, right? What else occurs? So what actionable signals are setting up? A 3-2 expansion to the upside on the 30-minute. A 3-2 expansion to the upside on the 60-minute. A 2-2 continuation after this 2-2 bullish 2-2 reversal on the 15-minute. And we're also setting up for an outside bar going to the upside. Because if this goes 2 down, which it did, if that comes back through and goes green, guess where that's going to go? Back to the upside to take out the other side, setting up for also the 3-2 expansion. So there's bullish actionable signal setting up. Boom. Bullish actionable signal setting up with full time frame continuity to the upside. So guess what? I can take this bullish actionable signal setup right here. Let's say I wanted to take it at the 50% of this previous candle right here. Boom. As soon as it breaks that high, I'm taking this to the upside. Stop loss is at the low of that candle. And then boom, we're just going to ride that thing out. And then at the peak, it was at 88 points. So 88 point move on NASDAQ, for example, if you had one contract, that's $1,600 right there. Boom. Right? So I took this actionable signal. Watch this. I took this bullish actionable signal to set up bullish confirmation and bullish actionable signals on the 15, 30, and 60-minute time frames into full time frame intraday continuity to the upside. Boom. That's what I'm doing. So those are the two things. Those are 2 ways you can do. What else occurs? When does it occur? And then the last thing is, where does it occur? So I like to take these actionable signals and stuff like that if I want to take a bullish setup, I want to take it after taking out a previous low. And for a high, for sell, I want to take it after taking out a previous high. That's where I would rather take it. So perfect example. Today was beautiful for that, right? At the beginning of the day, what did we have? We had price. I'll show it like this real quick. I'll go on the 5-minute time frame. So right here, if you notice, I'll just use this right here. Boom, 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 right? So previously, this is what the broad information looked like before. We didn't take out that just yet. Boom. This is what the broad information was pretty much looking like before. We had a price took out a previous high, came back through it, took out a previous low, tried to take out a previous high, failed to do so, and we came down and took out another previous low. I'm sorry, I'm sneezing, my bad. Allergies. But yeah, so we took out a previous low. After we took out that previous low, we set up for a bullish actionable signal. If that bullish actionable signal works, where are we going? Back to the upside to take out that previous high. Right? So what do we do? The bullish actionable signal right here. I'm sorry, I'm sneezing. Dang. Bullish actionable signal right here. We take the entry. Where's our target? The top of that broad information right there. So this is going to be the target that we're looking for, right? We're going to enter here, target there. We hit the high right there, 312 continuation to the downside, boom. That's our entry to the downside right there. That's a bearish actionable signal with remember the 15-minute 2-2 reversal to the downside. If we wanted to have a little bit wider stop, we would be still in this trade to the downside. And where are we targeting? Boom. that low. Now you might be thinking to yourself, why am I targeting it? I had a video covering this, but I'll explain it really briefly. The market, the psychology of buyers and sellers in the market is the same, right? Buyers want to buy at the low, sellers want to sell at the high. Buyers want to buy at the low, sellers want to sell at the high. Buyers want to buy at the low, sellers want to sell at the high. Buyers want to sell at the buyers want to buy at the low, sellers want to sell at the high, right? That pattern will not stop repeating in the market. Why? Because the only way that buyers make money is by buying it at a lower price and selling it at a higher price. The only way sellers make money is by selling it at a higher price and buying it back at a lower price. That is the only way you make money. And until people stop wanting to make money, then they're going to keep doing this in the market. That's why you're going to constantly see broad informations all the time in the market. So when price takes out a previous high, that's where buyers are taking profit and exiting, because they like to buy low and do what? Sell at the high. But guess who also wants to sell at the high? Sellers. So guess what they're going to do? They're going to sell at the high along with buyers selling at the high and taking profit, right? So if buyers are selling to exit and sellers are selling to enter, guess what the sellers are going to do? They're going to start, watch this, taking profit, meaning they're going to sell at the high, buy back at the low to exit their position, and then buyers are going to step in, and then the process repeats itself over and over and over again, right? And you can see it happening clearly right here. What happens? Sellers take profit here. Literally, it creates a new high. Sellers take profit right here. They don't create a new high. Sellers take it to the downside. We take out a previous low. Sellers aggressively step in here. Buyers aggressively buy that thing back. Literally, right after that, two into a reversal back to the upside. Where are we going? To take out that previous high. Once we take out the high, buyers start, watch this, profit taking. They start literally taking profit on their position. As they start taking profit, sellers start entering their position, pushing this thing back to the downside. And what does it do? It sells off to then go and take out this low. That is literally the process that happens over and over again. So you got to ask yourself the question, what is occurring? The actionable signals. When does it occur? That's multiple time frame analysis, looking for continuity, entering into continuity. And then where does it occur, right? Where does it occur? I want to buy, preferably I would like to buy at the bottom of a broad information with an actionable signal, the two into reversal, into continuity with into, if I'm day trading, into intraday full time frame continuity, which is the 15 minute, 30 minute, and 60 minute. If this actionable signal works, will that change the continuity or keep the continuity green on the 15 minute, 30 minute, and 60 minute time frame? If the answer is yes, that is a high probability trade that you can take in the market, and that is how you can pick and choose what actionable signals you can take in the market. I'm going to be doing a more in-depth video kind of covering this a little bit more nuanced for every individual trader, because again, you can day trade with this, you can swing trade. So I'm going to create deeper videos. Let me know if you guys want me to do that, and I'll create those and turn this into a series if y'all want. But let me know if y'all liked it in the comment section below. I'll see y'all in the next video. Let's get it.